Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 7th of January, Tuesday the 7th, 2017. I'd like to welcome you to this daily analysis video, daily trade setup video. I hope you enjoyed yesterday's video where I laid out the reasons for going along the dollar CAD. If you followed me along in that trade, you'd have woken up this morning pretty happy with your bit self. So the trade I'm going to look at today is the euro dollar. Now I'm just going to zoom out a little bit and just give you a little bit more context to why this is a nice trade. I actually missed getting in a little earlier, but I don't think that's going to matter too much, to be honest, once I describe to you the reasons for that belief. Now then, what we need is a frame to highlight this area here. Okay, now we're going to zoom into this area, so just give us a sec. Oh dear, deleted it. 1 second. Apologies. There we go. Can't zoom in while that's in, but I can talk about it from here, so that's okay. Okay, so it's important to understand what went on right over here before we can have an understanding of why price is sold off where it has. Now there are other things going on, but one of the reasons why there's supply in here is because if you look at this move, see this big strong move up, this vertical type price action? That's the type of price action when your price is going straight up or straight down. With big candles, very impulsive, volatile, some might describe that as. That's the type of price action that catches a trader's eye. And if you think about what type of trader would consider taking a trade when price screams vertically like that, the potential is obviously you've got momentum traders trying to get in as it goes up, but you've also then got the likes of a retracement trader who sees price make a new high, and as it pulls back they're looking for an opportunity to go long. So as price pulls back in here, traders do indeed go long, and as price breaks out that prior high, breakout traders come in. But as you can see, no sooner did they go in, massive drop in price, essentially trapping those traders in those breakouts. Now let's just go and take a closer look at that candle. It's one of the first candlesticks that I ever considered to be a trap. This is called the outside candle trap. It's this candle here, and its characteristic is it takes out the high or low, high in this example going up, low going down, high of the prior candle, so this is the prior candle, takes out that high, trades above it to some degree. Now this one's a really nice one because obviously that wick's quite big. Obviously that could be kind of like that and it would still be okay, so long as it trades above it to some degree, but the bigger the wick the better. And the reason for that is if you think about the mindset of the breakout trader, a breakout trader loves going long the breakout of prior swings and highs and levels, established levels of support and resistance. As it breaks up through that level, the more convincing that break up is, obviously the more likely it is to catch the eye of the breakout trader and get them involved to take the trade. No sooner do they go long in there, price then reverses and continues to trade lower, taking out the low of the prior candle and closing somewhere near its lows. And as you can see, it did do that. Now this one was a beast. It took out obviously a load of candles, which is obviously a better version of an outside candle trap, but still an outside candle trap is decent even if it just takes out the prior candles, high or low. In this case it took out a load of them, which makes it all the better. And the fact we've got that beautiful wick, and the fact it's a big strong drop, and the fact that it closes near its lows all adds weight. Now anybody who went along in there, anyone who was a buyer and that breakout is trapped in there. Right? Doesn't matter where they bought, anywhere in that wick, and then price flips over from the open and then catches them. Now then, It's my belief that humans aren't terribly good with discipline. So what happens is, so someone might say, oh, well, everyone's gone from those trades. They've all been stopped out. And I would suggest that's not true at all. People don't like losing money even more so, not very disciplined, very emotional about the outcome of a single trade. So they get very, very focused and drawn into that singular trade. It seems ridiculous, but that's what people do, and that's just the natural response, and that's what we're trying to take advantage of and also understand. Because if we can understand the psychology and the behavior of other trading participants, then it makes it easy for us to take trades against those opponents. I had a lady yesterday suggest that my trading style was very similar to this other guy's, and it couldn't be more different. She just totally didn't understand the concept. So these concepts aren't for everyone. It's quite a leap to get your mind into the sort of the arena of our opponents, but once you do it, you'll never ever look at the charts in the same light again, and being able to be on the right side of the market more often than not becomes a lot simpler and a lot more consistent. And not only that though, when you're acting with a confidence, because an edge presents itself, which is in essence is forged in human behavior. Right? And I would suggest that human behavior rarely changes. It's unusual for a human to adjust behavior. It's usual that people just get stuck in those behavioral patterns. We are pattern-seeking animals, and that leads to some very predictable behavior patterns in the financial markets. We're talking specifically about Forex, but this goes for anything, right? If you trade in stocks, if you trade in futures, it doesn't make any difference. It's always the same process. And even if a certain market has more computer software programs than others, which is indeed true, humans still made those systems, and they're still trying to prey on that those human weaknesses and those human behavioral patterns. So it makes no difference. It always presents itself in the same way. So that's a long way around saying this is an area where there's some buyers trapped. Now this move up prior to that pullback is important too, because this is the context of the market prior to the trap actually occurring. And why that's important is because if you look at this price action in here, it's just sort of backing and filling, not really doing much. Not many people are going to be paying too much attention to something like that, or a real flat market, right? Whereas when price sort of screams one way or the other, people become excited, right? They get some eyeballs on it, and they start thinking at that point, oh, I wonder if this is a potential for a trade. When the market's moving, it prompts those thoughts in humans, right? It prompts those thoughts in the trader. And it's from there where all analysis then kind of stems from in many cases. That context pre-trap, that pullback, that break to new highs, the beast of the outside candle trap, all adds weight to the fact, as the market goes down here, that there are people still in those trades down here. And if you've ever cancelled your stop loss before, if you've ever not had a stop loss, you took a trade and you just didn't put one in, or you had one in and then you cancelled it as price starts coming against you and squeezing you, right? Where would people place the stop losses? Very, very obvious. The thing that people need to understand, the thing that lady didn't understand yesterday, is that price action is very obvious. Your moves are very obvious. If you're talking about taking break pullbacks, right? So imagine this is a setup. If you think that's a good setup, then I'm sorry, but you're mistaken. That's an obvious setup for you to lose money. Okay, so anyone who tells you that those are great setups, you want to run a mile because they're obvious setups. Okay, and the reason they tell you that they're great setups is because obviously they're trying to sell you something, and you know, supposedly it's a decent type of trade. Now, there may be someone out there making a success of it. Good luck to them. What I'm saying to you is that if you're trading or attempting to trade setups like that, or you're in some type of trading group that tries and trades setups like that, I'm telling you that your moves are obvious. And what's that old phrase in poker? If you don't know who the mark is, then it's probably you, right? Meaning, if you don't know where the weakness is on the table, then you're probably the weak hand. You're probably about to get nailed. It's no different in Forex. These are obvious moves, right? Breakouts are obvious moves. If you're trying to trade breakouts, it's obvious. If you're trying to trade retracements, it's obvious. If you're trying to trade double bottoms and double tops, I'm sorry to tell you, but it's very, very obvious. And I can see these all day long, and therefore I can see where you take these trades. You then get into trouble, and then it's not hard. Then it's not a stretch to go from that place once you've got that perspective to then trade against your opponent. It's a simple task from there on, but you've got to be able to understand that whole process, and that's why, if you'd be interested in coming down the rabbit hole with me and joining me in my inner circle, then you'll want to probably click the link below this video to find out more. These tactics, I've been doing them. I've been trading this. This was born out of a chance meeting about 15 years ago, and has developed into what is an entire way of looking at the financial markets. This is not some random setup. This is not some daft setup someone's trying to trade in a trade room somewhere. This is an entire way of analysing the financial markets. And it's never been described in this to this degree before. I can say that with confidence because these are the things that I've discovered over the years, and to my knowledge, no one else has, and it's all been trademarked. So, okay, so we've established that if you're trading in the normal sense, these normal, well described patterns, that you're very obvious in your moves. The moves you make, I can see, and people who learn how to trade my methods can see them too. And that's a problem, because if you think about how you make money in this business, you have to take it. It doesn't sound, I've said this many times, it doesn't sound very pleasant when it's articulated in those terms, but unfortunately it's true. So either you get comfortable with it or go do something else. Unfortunately, it's probably the best thing you can do, because otherwise you're just going to lose money, because it is dog eat dog, and sadly these trading strategies are propagated to be, you know, the way that you should go about this game. But in many ways it's just the world's biggest con. It's like a transfer. It's like probably the world's biggest transfer of wealth ever. So you just need to be aware of that, and you need to think long and hard about your own strategies and how you are approaching the markets, and whether or not you think you're obvious in your moves. You may not, and if you don't, then good for you, but I would suggest that there are many of you who unfortunately are very obvious in the way that you telegraph your positions in the market. So getting back to the setup after the rant. I'm going to highlight that area again. And now you know why I'm highlighting that area. There's people trapped in there. Now then, if people were buying over there, I have talked about this level in previous videos. I just missed it because I wasn't busy looking at the charts at the time. But we've taught this level quite a few times. If there's been buyers over here, then what happens is, if you think about the psychology of the individuals who went long in there and who cancel the stops. Well, where's the stops? Well, if you're a retracement trader, breakout trader, your stop might be below that swing. Very common place to put it. If it was further away under these structures, and maybe there was some minor structures in there. The point is that it's obvious where you've placed your stop if you've placed a stop. And the sheer velocity of that drop is the type of price action which is indicative of making a trader consider their options, right? It makes you second guess your position. It's the type of price action that makes you think, oh, you know what, I don't want to lose this money. Maybe I've took too much risk. You know, it wouldn't be too much of a surprise for a human to have taken too much risk, right? I'm going to cancel my stop loss. So what that price action does is it's actually it's in many ways it's like a conduit to poor trading process, right? That your efficiency of execution has just gone out the window. Maybe you started off the trade with the best of intentions. Maybe you didn't take too much risk. Maybe you executed really well. Maybe your entry was really tight. You know, I know a lot of people obsess about entries. Not something I obsess too much about, but a lot of people do. Maybe you nailed your entry, maybe you took the correct position size for your account, maybe your risk, everything's in place, your stops, your profit targets, the whole 9 yards. You execute well, but as that price action starts going against you, it's in here that you start having those thoughts that are going to get you into all kinds of trouble, right? It's the confusion at that point and the second guessing and the fact that you don't want to lose that money that makes you hemorrhage outside of good trading practices. And now at that point, then, if you believe that's possible, then there were traders in those trades still from being a buyer up in here, even when price is down in here. And what I want you to do at that point is I want you to put yourself in the shoes of that person. You've probably been that person before if you've been around trading any length of time. If you're new, give it time. But hopefully listening to me, you won't put yourself in that position. But, you know, it's a very common thing. We've all done it. I've done it. Everyone's done it. When you're in here, your motivation has changed dramatically from the individual who was buying originally. When you took this trade, just think of the emotions of it. You were probably amped up as price starts to move quite aggressively to the upside. When it breaks, you're probably quite anxious and excited all at the same time. But as it continues to go up, you're starting to make some money at that point, right? In your account, you're making some money. So you're super high at that point. You couldn't be more excited. Now, that's very different to the individual as price turns and it starts to the price action starts to, if you will, turn the screws on your psychology. It's not doing anything to your trade. Your trade's in place. If you were to get stopped out, if your stop was under here, if you were to get stopped out, no big deal. You know, you didn't mess with the process. The problem is it makes you want to mess with the process. The trade was perfect, but you're about to make a pig's ear of it. You're about to mess it up big time. So then you go through a completely different set of emotions. Now it's all changed. The individual who was making money up in here is not the same individual who's considering cancelling their stop. And I would suggest that the individual down here, once you've cancelled your stop, is obviously very different to this individual and quite different times a few orders of magnitude than this individual over here. The price bounces up, there's a glimmer of hope. It's not as bad as it was down here. This is obviously the worst moment in the trade, but then it sinks to new lows. And then at this point, it couldn't be worse. Right? These are tears falling down that person's face. This is the worst moment in the trade by far, right? But if you believe that people are in that trade, you can logically come to that assumption. And price bounces, and I could talk you through the whole psychology of all of that, but ultimately we end up back in the place where you were a buyer. And what that allows that individual to do, if they weren't sickened off by the paper loss in the account and just cut and run, price came back into the level. And as I said, because you've been a totally different individual at different moments throughout the course of this nightmare, trade stroke nightmare, as price comes back into this level, you're not all up about the money at this point. You don't care about making money over here. You wanted to make money over here. You want to get out alive, right? You want to get out of this alive, because potentially you did take too much risk. So if you were a buyer over here, then to exit that position, at what would be an absolute result for you, a slam dunk happy days result, is a break-even trade, right? The scratch trade, second best trade in the book. So if you get that opportunity, you're going to do it. You are highly, highly motivated to bail on this trade. Highly motivated. Okay, for different reasons. Over here, you're motivated to make money. Over here, you're motivated just not to lose any money. And I would suggest that this motivation, given the psychology of that price action and what you've had to endure to this point, is extremely strong. Right? You would just want to get out, man. It's not going to reach that top edge because there's so many people wanting to bail out in front of those people who maybe bought the absolute high over here. There's just no way. There's just a ton of supply just firing off at that level. Now, there are many other supply-demand dynamics going on as to why this is a good place to sell. But that aside, that's one major key factor. And we consider them all, by the way, just so you know. So we've established that if a trader was in here, the price comes back and they've been through this entire nightmare, then they're going to bail out or break even. If they're a buyer, that equals they become sellers to exit. And that's an important, critically important point to understand. If you buy over here thinking that's going to follow through, and then you go through this nightmare disaster of drawdown, and then you get the opportunity to bail out, when you exit your position at break even, that is selling. Now, it's not selling in the way that you might you normally understand selling, as in you just take a sell trade. This is what I refer to as forced selling. It's forced selling because you cannot believe your luck. You've been through this disastrous set of circumstances. You've had an absolute gift. You can't believe that you're going to have the opportunity to bail out or break even, and you're going to do so en masse. Therefore, it's a forced behavior. It's a forced set of selling that's going to occur over here, and that's why one of the main reasons why this was a good place to be a seller. Now then, let's go and have a little look closer at the price action. So, looking at the price action in more detail to where we are now, do have a fairly decent trend line, touched several times. And interestingly, look at this. See the bounce off the trend line? People would be looking to trade that. That's what I refer to as entry cheese, right? That's the price action that gets people in at the hard rate edge. Just consider this for a minute. When you're looking at levels to enter off, what happens is, and this is why I refer to that lady yesterday, the conversation I had with her. That's why she with the best will in the world didn't know what she was referring to really. Is that the traders normally are trading like that, right? They're making decisions based off of price action. Sorry, I can't believe I just deleted that after taking 10 minutes to put it up there. Well, there you go. Let's try again. So let's pretend none of that's happened. Let's just blank that off. And let's just think about what that looked like at the hard right edge. Now, the hard right edge is what we all have on our charts. It's where price is in the here and now. And it's where we make our decisions to enter into trades. And the reason we do that is because if you consider first of all, what we do is we're obviously some type of trader, right? Now, fortunately, there's not that many major disciplines. It may seem weird that we can hack the strategies of all the traders in the world, but the reality is, while many traders have crazy amounts of weird and wonderful strategies, there's not that many major core disciplines. It's a handful. And if we can reverse engineer what those are, then it makes it real easy for us to see where they are, where they're losing money, where they're in trouble. And it's at that point, boom, we want to act when our opponents are in trouble, right? Psychologically, financially, that's the time to get on board. Doesn't mean every trade makes money, but it means the edge is present and you must act. And if you keep acting consistently and efficiently, then obviously over time you should be good. Now, what people do is let's say someone is a level trader and they're using trend lines and levels to make decisions. What people do is they take historical structures, right? So if you've got a trend line like this, something like a nice 45-degree angle, right? And it's been touched several times. And the idea, therefore, is that it's a decent level, so if it's been touched several times, that would be considered a decent level. One touch, two touches would be enough. If you got 3 or 4, brilliant. And that just adds weight to the setup. Then you've got historical levels that are potentially playing a part, right? So price breaks out to new highs, pulls back, and goes back into that prior resistance, and now becomes support. Now this is where this conversation yesterday is where people get this totally confused. Is people think there's other trade rooms and things and people selling trade setups and things. People think this is what I'm talking about. It's not what I'm talking about. That's the people trading break pullbacks are people I'm trading against. I'm taking their money, right? Because their moves are obvious. This is what I'm trying to get to. And once they've done the historical analysis and once they find themselves at the hard right edge and all of that analysis is coming together in that one place and you've got all that confluence going on, what gets them to pull the trigger is the entry cheese and the hard right edge, because the hard right edge creates an illusion that somehow this area to the right of our charts is not going to fill, and somehow it's not important to think in those terms. What's important is what's happening in the here and now, and that's what gets them in trouble, because no sooner do they react based on the entry cheese, next minute price collapses and goes against them strongly, right? It's the total opposite to what people believe, right? So a break pullback is cannon fodder for me, right? I love to see break pullbacks occurring because I'm going to come and wait and sit in the shadows until that setup goes wrong. Then I'm going to take your money potentially. Because it's obvious. That's what I'm trying to get across. Your moves are obvious. And if you don't think they're obvious, then fair enough, good luck to you. But trust me, 95% of people's moves are obvious. And given the fact that the way that we make money in this game is to take money, then that's a problem. So going back to this example, right? They didn't know any of this stuff. They didn't know this was dropping. What they saw was price reacting off this trend line, as an example, into a prior level. If you put a Fibonacci on there, it's probably 50-60% fib. It's all coming together and you start getting positive candles bouncing off the level. That's your entry cheese. That's what's going to convince the trader in to believe that that is what price is going to do next. And all the books and all the so-called gurus, right, all these other trade rooms and are telling you that that's how you should trade. What I'm saying to you is that's a bad choice, because if you think about now what's happening to those individuals, they're getting crushed. If you went long in there, there's no denying where you are currently. You are losing money. It's not up for debate. You cannot argue it with me. It's just a fact. Now, how did they get themselves in that position? And that's what I've just walked you through. That's how they get themselves in that position. They're making their moves too early. They're going too early. They're reacting to those historical structures, and then they're reacting to the price action in the here and now, and they're not considering the hard right edge. So that they're reacting and jumping in because it looks as if it's the setup. It looks like now's the time to act, and then they're in trouble. Now the balance of probability is not to the upside, it's to the downside. The edge is now with the shorts, right? And whoever went long in there hoping that would go long because of all the reasons I've just described are now in trouble. They're now losing. So they're now considering, as we've just discussed, the following: cancelling stop losses. They're losing money, right? It's not up for debate. To varying degrees, they entered at different points in these candles, but all of them are losing. All of them are losing. Some are losing more than others, right? Some have took too much risk. Where's the stop losses? Well, they probably would have been below there, worst case below here, but they're considering cancelling them if they haven't been stopped out. Some will have been. cancelling stop losses. Psychologically, they're in trouble. Psychologically, they're unsure. Psychologically, they're getting crushed. Right? Negativity, thinking about averaging into your position, all the bad things. They've already hemorrhaged. If they've not been stopped out, they've already hemorrhaged outside of their process. So now they're in all kinds of trouble. They're in hope and prayer land at this point. That is now an opponent who is weak, and now I want to act. This is the moment in which I'm comfortable taking some financial risk because I know my opponent's in trouble. Does that mean that sometimes that won't work? Of course not. It's trading. You don't have to be right on every trade to make money, but it does mean it's an edge. It does mean that you should act and efficiently execute, and over time you're going to be in good shape. Now, this particular trade has a little bit more going for it this morning because the dollar, in my view, is undervalued at current levels, and this morning Greece is back in the headlines. There's a problem with the IMF in terms of agreeing the debt restructuring. There's French elections coming up, and Marine Le Pen is leading. There's an awful lot of things going wrong potentially in the euro. The euro dollar for me is the pair to short over the 2017, probably the whole of 2017, certainly the first 6 months, and without question the first 3 months. So. It has something going from it. It has something quite considerable going from it from a fundamental perspective. So, if we get a bit of a pullback, this looks like a cracking trade. To be honest, I would probably stick my stop above there because I'll be comfortable just staying in this trade, but everyone's different. Make sure you go for at least 2 to 1. Don't take too much risk. But honestly, I think this is the potential beginnings of a real nice trade. So, if you'd be interested in learning more about these tactics, it's completely new. It's completely different to what you've ever come across. I would suggest before. Then click the link below and come and join me in my inner circle. The information in there is complete. There's nothing in there that you could look at and go, I'm not sure what he means. There's videos, there's hours and hours of content, there's PDF documents, the whole thing. The website's brand new, so you'll be getting in right to ground level with this particular offering, and in my opinion, it's the best delivery of this type of information I've ever done, which would suggest it's the best anywhere. So if you'd like to learn more about how we do this, tomorrow I've got my weekly coaching call coming up, so it's a great time to join me because we'll probably have a 2-3 hour session tomorrow, and you'll be able to take part in that. So you'll be able to get straight into all the historical stuff as well as soon as you come in. So if you'd like to learn more, do that now. Click the link below because you know it makes sense. Tell your trading buddies if you like the information. Hit the like button. If you've got any friends who you think will benefit from the information, share it with them, and hopefully I'll see you on the inside.